Believe it or not, there's a difference between the stock you buy versus what you pay for the stock. And today we're going to listen to a video by Mohnish Pabrai that helps break down the difference between a great investment and a great company, because those two don't go hand by hand and they're a big difference. Hey guys, my name is Charlie Marr and I'm back at it with another video. In this video, it's going to be a lot smaller video. Like I said, we're going to listen to Mohnish Pabrai here, but it's a shorter clip, but it's really important to understand this. I mean, it's something that you need to be able to distinguish. So a small clip, as you can see, it's only a minute, and then we'll listen to it, and then I'll give my quick comment afterwards, and we'll move on to the next videos. Let's go ahead and listen in here.
The problem is that when you own these really great businesses, everybody knows they are great. Okay, so the price is very high. Usually the price is very high. And I tell him, it's not about the great business. It's about the great investment. So a company can be really good. It doesn't mean it will be a good investment. And a company can be not so good, and it could be a great investment. So the interesting thing about the investing game is, if the game was simply about finding the best assets or the highest quality businesses, it would be a very simple game.
Okay, so that's the end of that video. Again, a really small clip, but it's important to be able to distinguish the difference. It's not the same thing when you're trying to buy a great company versus when you're trying to place your money in a great investment. I mean, there is a huge difference. And one of the biggest mistakes that I see happen very often is a lot of these, I wouldn't call them noobs, new people that are coming into the market. They tend to want to buy stocks like Apple, like Walmart, like Disney, like stocks that are a little bit more stable or are very powerful, great companies. But the issue with that is, like he said, everybody already knows that. And this could go into two different categories. Number one, just putting your money into a great business, just in general, like any other company out there. And number two, also with like news, like, oh my God, this is going to be big. This current catalyst is going to be huge. If everybody already knows that and they're aware of it, it's probably already priced in. That's how you know about it. You think you're the only one that knows about that piece of information. So again, just because it's a great business and a great company, it doesn't mean it's the best place for your money to be in. It's not a good investment, especially if you're trying to achieve high returns. That's not necessarily a great way to achieve high returns. Now, of course, you'll make some money that way. Your account will still grow. They're strong companies for a reason, but you're not going to make the highest returns. On the other end, when you're focused on kind of bad companies, and it doesn't have to be a bad company, it can be a small company, it can be an unknown company, you know something that the public doesn't know, you understand something that they don't. So you're smart money. You're buying when everyone's being fearful or when nobody's aware of it yet. And then that's when you make a lot of money, when the market starts to realize that the value is there, or that it's having its balance because people became too fearful. So again, there is a big difference between a great company and a great investment. And I personally like to focus on where my money will be at the best place to make the higher return on my investment. So I like to focus more on a great investment, not a great company. And those two just don't go hand on hand all the time. And a good example of this is, most times when you're trying to buy a great company, like he said, they're usually priced very high. And I see this more as a stage 3 thing. So it's kind of like buying a dollar for $10 because you believe that it'll be worth $20. Of course, if you buy a dollar for $10, you overpaid. You're paying 10 times more than its current face value. But if you believe it'll be worth 20, then yeah, there's still money to be made. The problem with that is most times they have the companies face issues, and they become, because they're so overvalued, a lot of money starts to leave, and the stock kind of starts to face reality a little bit. So it starts to pull down. So what are you going to do when you buy a dollar for $10, and you paid $10 for it, and it goes to 7 or to 8, or 8 to 7 into 6. You're going to start panicking. You're going to be, oh my God, how low can it go? It's not really worth that much now. So that's the mistakes I'm trying to avoid. And again, you're missing out on that huge return. I mean, you're paying 10 times over just to make 100 times your money. And that's if it continues doing that. And most likely it's because everybody already knows. On the other hand, why not focus on buying $1 for 50 cents? Heck, you could even buy $1 for $2 or $1 for $1. I rather buy a stock that is trading at face value and I pay $1 for $1, but I believe it's going to be worth $2 to $3 in the future. I get to make a lot more money and my margin of safety is a lot smaller. Of course, the best thing to do is try and look for $1 for 50 cents. And that's a great investment. But yeah, that's pretty much it on this video. I mean, it's just a little thing that you need to understand and be able to distinguish the two, be able to separate the two. I always tell you guys, it's not what you buy, it's what you pay. So that's just going to be my little quote that I'm just throwing at you, and I think I used to have that on my Twitter. It's not what you buy, it's what you pay. So I don't care what company you buy. A lot of people are like, well, I own Apple and I own this and I own Walmart and I own, they're trying to say the big stocks like Disney, everything in the S&P 500. But it doesn't really matter to me what you own. What I care about is what you paid. Like, it's about the value. And again, that's just my value investment side. So I rather own a company that nobody's talking about, that nobody knows, but I paid for I'm buying it at a great value and I have a margin of safety and I'm in control. But yeah, that's pretty much it on this video. I will see you guys on the next one. I hope you learned something. I know it's a smaller video, but yeah, I still wanted to throw that out there. I'll see you guys on the next one.